And we're going to start with opportunities and threats in the residential solar market. I'm Nicole Litvak, a solar analyst at GTM, and I take the lead on a lot of our coverage of the residential market in the US, so I'm especially excited to talk about this today. And let's be honest, no offense to the next two panels, but residential is really the cool kid that everybody's talking about. So, it was the fastest growing market segment last year with almost 800 megawatts installed, and this year we're going to surpass a gigawatt for the first time. So today I'm happy to have panelists from 4 of the leading companies in this space to talk about financing, M&A, and some of the other trends that we're seeing in residential right now. And with that, I'm going to start by having each of my panelists introduce themselves, and just to get us started, in 5 words or less, what is the key to success for a residential solar company?
So, sure. My name is Jonathan Doochin. I'm the CEO of Soligent. Soligent is a large solar distributor. We do everything from panels to full systems to design to services that support financing, you name it. But if you needed solar in a box, we basically provide that as a distributor to all of our customers, and we have about 4,500 across the US and been around for 33 years. I guess for my 5 words, I would say externally, reputation, internally, operational excellence.
Cool. Hi, everyone. I'm Chris Tan. I do product marketing at SolarCity. I would say my 5 words would be give customers what they want. We end up having a lot of conversation with customers and just being flexible around your business and changing it around to really respond to specific issues that customers have is, I think, really critical.
Hi, I'm Micah Myers. I'm with Clean Power Finance, and I want to thank Shale for scheduling us at the midday on Wednesday. This was the hook to get you all to stay, I think, was the residential section. At least that's what he told me. So here we are. We're competing with lunch for a few folks, but we'll try to keep this interesting so we don't fall asleep up here. Clean Power Finance, I think most are familiar, so I'll forego the commercial. But my 5 words, I guess I'll start with 1 word of advice would be focus. And if I expanded that into 5, it would be focus on your core competency. Or another 5 words, do what you do best. And I think we're going to get into why I have that kind of advice as we get into the context of this dialogue, but those are my 5 words.
Great. So my name is Joe Miller, and I'm with Solar Universe, and we are a solar franchising company with offices that go from Puerto Rico to Hawaii. We have almost 50 offices now. And I think when I think about this business, the 5 words would be, and I'm going to primarily target this to kind of the upper medium part of the tail, and that would be don't go it alone. It's a very complex business. It's a very dynamic business. And for small, medium-sized integrators, I would say seek partnerships, don't go it alone. And it's clear from some of the charts that were shown previously that the big are getting bigger, and it's going to take alliances, it's going to take business relationships to make it work.
All right, thank you all. So I want to just dive into some of the recent activity that we've seen in the residential market. So to start, as Shale mentioned earlier, 2 of the major acquisitions over the last couple of months have been Sunrun and NRG acquiring one of their installation partners, REC's residential division and Roof Diagnostics, respectively. So, Micah, I want to ask you, is this really the trend of vertical integration? Is that what we're seeing here? And because CPF has kind of a similar model to Sunrun and NRG, is that something that you guys would consider doing as well?
Well, certainly the timing between those 2 events got our attention for sure. We don't think that's a trend. We don't think that vertical integration or this consolidation is a trend that you're going to see continue. I think if you look at both those transactions and peel them apart, they're done for very different reasons that made sense strategically for all entities involved in that. Again, I don't know if we're going to dive into the vertical integration question here or not at this point if that's going to be next, but when we look at the market, there are really a couple reasons why you'd want to be vertically integrated. And for the two parties that bought their own installation channel, one was to control their own destiny. Like, I really want to rely on my own best-in-class installation services when I need to, but I'm going to operate a multi-channel business, and I want to maintain the same business model that I've had in the past. I just want to be able to control my own destiny, because the public markets are probably going to look at me and say that's a risk if I can't do that. So that transaction made sense. On the other end of the spectrum, and we've worked with lots of different installers and different installer business models, the other one was more about origination. So in the case of the transaction on the East Coast, that installer had a great presence in retail storefront and a great origination model. So I think that transaction was actually more about acquiring origination volume than it was acquiring installation business. So yeah, we don't think it's a trend, and we don't think vertical integration is necessarily a requirement for the public markets to give you value.
So I guess what you're saying is no, CPF is not planning on.
Oh, was that part of the question? Yeah, CPF is not planning to vertically integrate. In fact, I think it's a battle of ideology. We're going in the exact opposite direction, which is, we don't think in order to maintain brand consistency from a customer experience perspective, you necessarily need to be vertically integrated. It's not true for most industries, actually. I think the panel yesterday talking about solar mainstream was talking about mobile carriers, and mobile carriers are not vertically integrated, right? They don't own their own towers. They don't necessarily own all their own sales channels. It's piecemeal, a lot of different agencies involved in that customer experience supply chain. Yet from the consumer perspective, it feels like a consistent brand. I'm getting my cellular service from Verizon, even though I bought it at an Apple store with an iPhone and it goes through towers that Verizon doesn't own. So I think we're going in the opposite model, which is, let's let companies who specialize in each individual piece of the supply chain focus on what they do best. And when you synthesize that together, that should actually lead to a better consumer experience. So I don't have to be best in class at all things. We can work with a network of providers that are best in class at the one thing they do, which is why I come back to focus.
Okay, and Joe, I want to hear from you about this as well, because Solar Universe works with both Sunrun and NRG, I believe, as well as other companies for financing. So from your perspective, being one of these other installers, are you concerned about this, or is this changing your strategy at all?
No, it doesn't change our strategy. I think what we've tried to do is really have a rich and broad toolbox and invite people into our network who can use it and make the most sense of it. But when I think about these acquisitions and we really look at them, I think what it shows me is where the real value is touching the consumer. I think if you have a presence that's in the home, that engages the consumer, that renders the value proposition and creates it and puts it on your own terms, that's going to be incredibly valuable in the future. And that's one of the components I think that we've really tried to stake our presence on, is we want to have an access to a variety of panels. We want to have access to a variety of marketing tactics, whether it's selling direct, it's selling door-to-door, it's selling online. But we also want to make sure that we are giving consumers a fully branded experience, but touching them under our brand and under our logo in a way that allows us to express our value proposition uniquely.
So that's interesting because, from the installer perspective, we saw, REC and Roof Diagnostics, two of the leading installers, be acquired, and then another one, RGS Energy, is actually starting to raise its own funds. So I'm wondering if, is there some sort of a point where you become large enough that you have to take one of those two paths? Because Solar Universe is certainly up there as well.
Yeah, we don't believe that we need to have our own funds. We think that the funds and the nature of the funds are going to change over time. In fact, I think it was one of the predictions for next year, which I agree with, and that there's going to be a variety of different value propositions that render themselves through the funds. And so when you think about that, what we want to do is really be an aggregator and connect people to the best-of-class products and funds and services. And in doing that, it just simplifies the entire industry for the consumer and removes away a lot of the barriers to entry, which have everything to do with confusion, have everything to do with trying to demystify this business and this platform and simplify it, make it easy, and put it in the hands of the consumer.
Great. Now, Chris, from your perspective, I'm curious, so I mean, we have a lot of financing companies who are growing, including some of you guys, and are we, is there room for all of these financiers in the market, or are we just in this growth period and we're going to see, a few win out in the end?
Yeah, I mean, I think, from the vertical integration question, I think what we think and what we see is that customers really value simplicity. And so one of the benefits that you get from a customer experience side of things is when there's only one phone number to call for the full spectrum of issues that you might have with a 20-year solar relationship, that's valuable to the customer so that they don't have to think about all the different steps. They don't have to dig in. They can just kind of sign papers on one day, schedule install, and then kind of everything is then done for them. So we think that's really important. That's kind of where we focus our efforts are improving every single part of that customer experience, because we, one, can control it and then can kind of think about how do we scale each of those pieces so that they're efficient, so that we can become experts there and provide exceptional customer experience. And then kind of the other side is, I think the industry is still quite young, so kind of the question around like, is there room for other kind of business models? There is, because there's a spectrum of customer types and the expectations, the range of expectations that customers might have. So we are focused on a customer that values that simplicity, and there are other customers who like to get into the weeds and they maybe want to purchase, and they don't want to do kind of PPA or lease, which we do, but most of our customers prefer the finance options because that ends up meeting their needs better. So I think there is room. We're only at 0.5% of roofs. So to say that there's going to be like competition for that huge blue ocean, it would be like to say that, oh, we're too focused on competing with each other and not focused on winning those homes.
Yeah, that's true. I think we may be still pretty far from seeing how this industry is really going to play out. And I want to come back to some of the financing options that you brought up. But first, while we're still talking about different business models, I want to ask John about the local installers and where there's room for them in this consolidating market.
Yeah, so I think you can look at many parallel industries. If you look at HVAC, for example, you see very local installer bases, where a national player may be and may actually want to be very vertically integrated. A local player has other things that they can leverage. So first, they leverage partnerships, right? So as a distributor, Soligent, we make sure we provide the back office for these guys to do what they want with their own brand name, and we give them all the abilities to run their solar, to get their equipment, to do their financing, and do it through us. So that's kind of where we come in to support them. So what we're seeing is that a lot of these players, just as they do in HVAC, have a lot of strong partnerships, and those partnerships give them the ability to survive. So if you look at, Train or these other HVAC organizations who provide financing, they provide equipment, they do these different things, they as a manufacturer and we as a distributor, but they give these local players significant puzzle pieces to support them. And a local player, they have local presence, and that makes a big difference, right? So the person, they have a network in the area, they're typically selling something else before they become a solar player, and we'll see more and more of our local installers come from HVAC and come from roofing, and you'll see them leveraging their networks locally. So they can do that. B, they actually they can sell at a higher price. And then C, whereas the national players come and they drive down in these markets in a very successful manner, one of the big pieces is there's a ton of infrastructure cost to launching into these new markets. A lot of our local players actually have already built infrastructure for other purposes, and they're just adding solar on, or they're building out a smaller solar operation. And so there's a very significant role for that in actually their cost structure. So I actually think they can be cost competitive. I think they can sell at a higher rate, and I think this is modeled after multiple other industries, HVAC and roofing being two, and successfully done over and over again. So I see that population growing. I think one of the biggest ways to proliferate that is actually the proliferation of finance. I think it makes a very large difference for them. So.
Yeah, absolutely. So going off on that, so right now, the leading 10 installers control more than half of the market. But a lot of those companies and a lot of the other financiers that aren't necessarily counted as one of those installers, they have grown perhaps by offering leases and PPAs, which may have been easier to sell in the past, or even still are, with the high cost of owning a system. Do you think that that's true? And if so, we're going to see this emergence of loans and therefore other companies?
Yeah, so I think we're going to see a significant emergence of loan products. I mean, again, if you look down the other channels that represent what local installers do, whether that be, again, plumbing, HVAC, or roofing, the products that are offered through larger entities and through banks in those areas, I mean, you've got significant amounts of loans. I still think we'll see a strong prevalence of leasing, but I actually think that loans are typical in these scenarios where you finance a piece of equipment in the home. And I think that, I'm already seeing from my role tons of innovation in the loan sector with new products coming out, more aggressive products coming out, and basically the ability to actually use these for solar installs. And I think one of the biggest issues is over the last, let's say, 3 years, the availability of financing to our local installers has been limited, and you see the vertically integrated organizations using tax equity and PPAs, and they really drive forward with that because they can present a solution that is actually hard for the local installer to present. And you see a lot of cash deals coming from local installers in a significant prevalence, but what you know about a cash deal is it's much harder to land a cash deal than anything else. So yes, we're seeing a ton of innovation on loans. We're seeing that move into really lighting up this installer space in the next 6 months, and a big move happening there, and that's complemented with also innovations around leasing.
Yeah, and I want to hear from the rest of you about this because I think it's an extremely important trend and topic to talk about. I thought it was really interesting yesterday in the crowdsourcing panel when Shale asked, how will the majority of residential solar be purchased in 2020? And a large portion of the audience said loans. So, Chris, SolarCity is really just focused on, or has been focused on, leases and PPAs to this point. Do you see yourselves moving into the loan space as well?
I mean, like we look at, when we talk to customers, how do we create a product that's extremely simple for the customer to understand? And the type of customers that I want SolarCity to go after, this is like the mainstream group of customers in America that aren't thinking about their energy bill or costs very deeply. The average American, their interaction with their utility and how much they think about their utility bill is 6 minutes a year. So they're not actually very engaged with, what are my choices around energy? They don't even know they have a choice. They don't tend to know that they can go solar unless maybe their neighbors recommend it and it's a referral. And so that's how we see, a lot of our customers end up coming to us, is they heard their neighbor had it, they had a good experience, and so they are checking it out. And so, to the extent that you can, get into the details of like loan purchase, just like in the automotive industry, you can buy up front, you can finance, you can lease, and there's going to be, a range of customers who that works for. We think, to the extent that you can, be more like utility company, something that the customer is already, really comfortable with and gets, and they don't have to ask a lot of questions about, what that relationship looks like, and make that experience as similar to that experience as possible. That's where I think you're gonna win a lot of customers, and not so much the specifics of like what the dollars are and cash flows.
So was that a yes or a no to loans from SolarCity in the future?
We do PPA, lease, and if you want to purchase, we'll sell you a system.
All right. Micah, same question for CPF.
Sure. I think it's helpful actually to look at the history of third-party ownership in residential. When David Arfin went to SolarCity and created the solar lease, back then it was all about tax arbitrage. There's a $2,000 cap on the residential investment tax credit. He said, let's have a third-party owner monetize that tax credit. We can pass some of the savings on to the consumer. And that's how SolarCity took a product to market. Sunrun did the same thing. And then the ITC sort of became irrelevant. We had the cash grant, and then we had bonus depreciation. And so the economics, it's always been this tax arbitrage opportunity to create value and pass some of that on to the consumer. So today, You can do a prepaid lease for less than you would pay net cash after receiving the investment tax credit and all the rebates for a consumer, right? There's a reason, which is the investors still value some of that accelerated depreciation and they're sharing that. Same thing happens when you lease a vehicle. So, but what that made the industry do is take solar to the market as a service. And it was sold either as electricity, just like your utility sells electricity, or as a lease with some sort of production guarantee. And I think consumers have gotten used to this being a service. Their alternative is buying electricity as a service. And so usually consumers buy services from trusted brands that are going to deliver that service for the next 20 years. I want to buy this service from a utility. I want to buy this service from Comcast. I want to buy it from Google, from someone that's going to be there. There's always going to be a segment of the population that wants to own the system, and so you better have an option for them to buy or you're not going to get in the door. And so loans will fit that, and we've seen a lot of innovation happen around loans, particularly with PACE. In fact, one of our hottest selling products right now is a combination PACE loan with a prepaid lease, and so you actually see hybrids in the market, which are getting a lot of traction. And so, yeah, we do see a place for loan, but I don't think just because the ITC is rolling back from 30% to whatever they come up with, 10% if nothing happens in 2016, that that's a reason that we'll move away from third-party ownership. I think it really depends on how consumers perceive the service, and since they buy electricity as a service today, they're probably going to buy solar electricity as a service in the future in mass. But again, loan products will fit a certain niche of the market for sure. Particularly in PACE, if it's offered, you could imagine PACE being offered through a municipal utility or a co-op. Now that's like I'm buying a solar electric service from my actual municipal utility, and they're going to collect the rent through my tax bill. That sounds like a great value prop, and CPF, of course, we're financial product agnostic. We do the same sorts of services for any of the financial products. We just want to make sure that whatever is the best product market fit is the one that we support the most.
Mm-hmm. And how big is the opportunity for PACE actually? Because, I mean, in the past, there's been a lot of pushback from the mortgage lending community, and so far, PACE seems to have only taken off in California. Are we going to start to see more of that in other states?
I'm the wrong person to ask, but the people who inform us say that it is expanding rapidly, and we should expect to see more PACE programs across the country, definitely in multiple states.
Joe, do you have any views on that? Have you?
Well, certainly when it comes to the PACE programs, they've been extremely important to us in Southern California and San Diego, Riverside, San Bernardino, as those programs have rolled out. But I think one thing that we're all going to have to really realize about this industry is it's about change, right? And it's always going to be about finding that right value proposition for the consumer. I mean, if you think about it, the guys at Circuit City thought they had it right. The guys at Montgomery Wards thought they had it right. The guys at Radio Shack are still trying to prove they have it right. It's going to be a variety of ways to reach consumers, but the business and the business models, the financing, what consumers are going to want, they're going to have to evolve. And so I think when you try and pick a winner today is almost kind of it's fun for panels, but in the reality of it is, it's going to be who can adapt, who can change, who can morph the fastest, and then take this complex value proposition and make it simple.
So do you see the industry as a whole moving in one direction, or what would you estimate as the split between third-party owned solar and direct-owned solar a few years from now?
Well, when it comes to any of these products, our approach to this is we're open for business. So we do business with Sunrun, we do business with NRG, we do business with Sunnova, we do business with CPF, and about 25% of our business is cash. And we love the Hero program. So the answer is going to be whatever it takes to satisfy a consumer. But I do see that all of these products and all these services are going to continue to evolve and continue to morph. Probably 2 years from now, we'll be talking about a financial model which hasn't even been contemplated yet.
Mm-hmm.
Can I just a quick add? I think one of the biggest pieces on the financial, I guess, hold up in general in the industry is that there's significant friction. So if you look at the amount of steps you have to step through over the last few years to originate a loan, to even use a PACE program, to do leases in many cases, you see significant You get just plenty of things that essentially slow you down, that take a big piece of time. And what you run into is you run into the inability to actually sell your product if you're a dealer, and you get stuck in complexity of trying to make sure you have all the forms right, trying to go through all these different processes, and that's really held up our dealer base. And what I think you'll see that evolves out of this is the very, very simple answer, which is literally here's a document, sign here, credit approved in 5 minutes, and you're golden, right? And I think that comes from a few different areas, but that's what loans can bring to this arena. And one of the things that it's harder for leases to bring because of how they're bought is some of that same speed. That said, I think we'll see innovation on both ends, but it's that friction which slows down our dealers most, more than anything else, because oftentimes they can sell on a value proposition, they can change their pricing because they can create a value proposition, but then they have all this friction, they have a 30-day holdup, and they run into issues actually getting the job sold, and then somebody else takes it from them, or they're just out because of frustration. So I think you've seen this innovation in lots of other areas that go direct to home, and I think you'll start to see it in solar, and that will help proliferate our smaller dealers in a meaningful way.
But there's also a lot of different types of loans. I mean, you have PACE and banks like Admiral's offering specific solar loans or just a typical home equity loan. Is there any benefit to any one in particular, or I mean, do you think that installers should just be using one to simplify the process?
So I think you'll see, I mean, there's benefits to all of them. So what's very interesting about PACE is in the local geography, it's exceedingly effective, but different PACE programs have different administration. So some PACE programs will go in a matter of 10 days. Other PACE programs will take 30 plus days. So the customer experience for that 30 plus days versus that 10 day or that 1 day turn is very different. So PACE is really, it's very localized on how it's done. By geography, and it really depends on that local municipality and their processing and the group they hire to do it more than anything else in my mind. I think what you'll see is there'll be a whole bunch of evolution of products. We're going to go, you'll see 10-year, 15-year, 20-year products, you'll see unsecured products. I mean, these are things I see already, and then you'll see some sort of secured products that come out as well that are also low friction, but you'll see reduction of friction in all these cases.
And Chris, I want to come back to you with a follow-up. So SolarCity, you're very set on your model with regards to financing, but do you see it as a threat that all of these other companies are starting to offer so many other options?
Yeah, I think what it comes down to, I think for the customer is loans, PPA, leases are great for customers because they spread out payments over a long period, and the payment that we found is we can get your payment what you were paying utility before, we get that on a PPA rate. That PPA price is the magic sweet spot is 10% or more below that rate. That's when customers get interested. And so when we look at the landscape of loan programs today, to John's point, there's a lot of friction there, a lot of paperwork. You have to go back and forth. You have to put liens on your house and all kinds of things that create friction in that experience. And the loan products themselves, they tend to be short and relatively high interest rates to the extent where your monthly payment to service that loan would increase your effective energy bill for the amount of energy that you're getting from the system. So that's where I think loans are interesting because you get that benefit of spreading the payments, the customer gets the tax credit, but are they saving on a monthly basis? And when we're selling to a customer that makes $50,000 a year and saving $40 on their utility bill every month on the first month, no money down, that's meaningful savings. And so that's the kind of client base, that's the mainstream customer that we're trying to solve that problem, because when we solve that person's problem, that person is the American that's 50 million homes has that profile. So that's where we look at it.
Let's shift focus a little bit here and talk about some potential new entrants to the solar market. Micah, I want to ask you, because there are utilities already investing in CPF, but do you see utilities or even cable companies or anyone from any other industry entering the solar market?
Absolutely, and I think that this started to come up in the mainstream panel yesterday, and I wanted to ask a question, but we ran out of time at the end, which is, everyone said, yes, I think solar is going mainstream, but an objective way that you could test whether or not it's mainstream is just poll America and ask, how many people know what the solar brand is or what brands are associated with solar, and guess what, they don't. There wasn't a nationally recognized brand up there. There's not one yet. It's still a jump ball. Someone can own that. SolarCity wants to be that. Sunrun wants to be that. Others want to be that. And there are a few strategics who are waiting in the wings saying, maybe I want to do that. We're not really sure, but we're kicking the tires right now. So think your traditional nationally branded service companies that already have trusted relationships, they have a huge customer base, and very easily they could add solar as a service to their product portfolio if they had partners to help them take that to market, right? So that's what we get excited about. And I'll just give a quick anecdote. It might be a little stale because I've told it a couple times, but I've been in the industry for about 8 years now. I finally became a solar customer 3 weeks ago and got my first solar system. And that's fine. I'm one of the 0.5% of people, American rooftops, that actually has solar now. But what's new on this, brand new, is that I'm actually a customer of the Integris Energy Group. So anyone here of Integris? Integris is a very large multi-billion-dollar utility holding company in the Midwest. They have regulated utilities in Illinois, Michigan, and Wisconsin. And they have a fund, a branded product, a fund that they roll out across our platform, which is a game changer. So you take that small installer that's now armed with, as being a representative of a multi-billion-dollar utility holding company in the Midwest, and now all of a sudden the value prop is a lot different. It's Mr. Consumer. I'm a representative of Integris. It's a multi-billion-dollar Wisconsin-based utility. They have a program. If you qualify, they'll put solar on your roof and sell you electricity cheaper than PG&E. Are you interested? And all of a sudden, that's a lot different than it was when I show up and I say, would you like to purchase a solar system? And so we think that branding from front to end is probably going to be a big trend. I think it's probably going to be third party. There could be room for some loans in that paradigm as well. But having branded financial products that are taken to market with third parties, but really deliver that branded experience for the consumer. So that's what gets us excited, and we're waiting for the first large services company that's nationally recognized to jump in. We'll be ready.
Great, we're waiting for that too. And I'm going to take audience questions in a minute, but first, we've been talking a lot about opportunities, but the topic of this panel is opportunities and threats. So I want to talk about the threat of net metering regulation. So I'm wondering if, we've had a few net metering decisions made so far in California and Arizona. Have those set a precedent for decisions in other states? And to what extent are solar companies concerned about any particular states or just in general? Do you want to start?
Sure. Yeah, I think there's absolutely a precedence. I don't think that precedence is without struggle. So I think that utilities by nature are when they're taking on this net metering, if you look at a utility in general, they have huge infrastructure costs that are already built out. They've got a ratepayer base, which basically they charge all of their customers to maintain all of their infrastructure. And all of a sudden, you've got individuals, homeowners across the board putting in solar, and what that means is those guys are becoming less and less, or your population as a utility become less and less, your ratepayer base, in the sense that they're no longer your customers, they're buying a majority of their own power. So how do you react as a utility, as a PUC, when you start to see this happening? You still have the same infrastructure cost, and it's aging. You're not making as much money off the power that's at play because people are getting it from their own roof, and you're bearing the cost of actually connecting them to the grid. So while I think that there is significant precedent set for this, I also think that the long-term play for utilities becomes kind of sticky, because how do you actually support your utility, your ratepayer base, if all of your people start to go solar? Do you raise your rates, and who are you raising it on? Those who didn't go solar? So you're making it even more feasible to go solar. So there's a whole bunch of things utilities can actually do to participate, and we can always look to Micah for how they're interacting with CPF. But they're starting to realize that they do have to do that. Now, not all utilities are as progressive, and so, but you essentially, yes, you see a precedence. Second, you see an issue. Third, it really is up to them. There's a few different ways to resolve this, and we're seeing a few different things that I suspect will start to pop up, even just charging to be interconnected as far as like connected to the grid in general and paying a certain fee to, I mean, who knows what might actually come, or even the slowing of paperwork processes is possible long term. There's a whole bunch of things that could happen from this, but I think for today, it's safe to say there's a precedence, and we're starting to move that out across the states. But I do wonder in a few years from now what it looks like in a market that you can see a real struggle in is Hawaii, where they're over grid capacity. They've got people putting energy onto the grid, and they've got a real balance issue of how do they upgrade this infrastructure? How do they actually deal with all of their costs while people are basically removing the ratepayer base? Mm-hmm.
So we had a pretty good trend going. Oklahoma, if you guys watched the news the last 24 hours, actually just passed new legislation. So they came up with a surcharge. I don't know if it's a loss to the solar side yet because we don't know what the surcharge is. Yeah, but there are a couple trends that are really coming out. One is everyone's grandfathered. If you've already gone solar, we're not going to change the rules of the game. So that actually makes investors much more comfortable. If that was challenged, I think that would send a signal into the market that would really fundamentally change the cost of capital. But so far, everyone's been grandfathered. And so our message is buy solar, build portfolios of solar now, right, while net metering is in place, because you can lock it in. If the rules change in the future, we can look at the economic return later. So, grandfathering existing solar customers has been a trend, and then net metering with a surcharge. So California did it, Arizona, the ACC did it. This is what Oklahoma just proposed. And then the third one, though, which is really interesting. So Duke is a corporate equity investor. And so we watch their markets pretty closely. And if you look at South Carolina, they've got legislation on the table. It's already through the Senate. It's coming through Congress right now. And it basically legalizes third-party ownership. So there are two ways to fight solar, right? Net metering and third-party ownership. So it legalizes third-party ownership, but it also sets a precedent where the utility can actually rate base distributed solar. And that gets extremely exciting for us because I can't think of a better branded service provider than your existing service provider that could actually bring you rooftop solar and sell it to you as a service. So we're definitely watching South Carolina very closely as a potential model for utilities. It's one potential answer where if you're not going to rate recover through a surcharge, maybe you can join the fray and roll out your own distributed solar program and tell us where to put it, where it actually adds value for all ratepayers and where you have grid congestion and other problems. So utility ownership, I think it's a long ways out because it's going to take regulatory process, but we do get pretty excited about that kind of future where you can get it from a number of providers, including your utility.
Yeah, there are certainly a lot of different things going on in many states. And Joe, I'm wondering if that impacts decisions about expansion into new markets, and if so, how much?
Yeah, absolutely. We operate, and again, we operate in about 12 different states, and we have almost 50 offices. And we really do good and steep due diligence on these markets prior to us going there, because we want to make sure that as we enter these markets, that there's a value proposition that's going to last, and it's going to be one that's going to be around for a while. I think the industry's done a tremendous job at kind of beating this back at every turn, and I think many people in this room have contributed to those campaigns, have done a nice job. But one thing we do end up with here is a fee. And we end up with a fee to the consumer. We have to explain that. We have to have a discussion around that. And we have to make sure that's something that they're comfortable with. Even big fee, little fee, medium fee, we still have that as a discussion item that we have to deal with. But I think the industry's done a good job, and for us, it gives us great pause as we enter into new markets that whether or not we see a long-term consumer viable proposition.
All right, so we have a few minutes left. I want to open it up to audience questions, and I saw one over there. Mike is coming to you.
Can somebody talk about what is happening in the Congress regarding ITC beyond 2016? We hear about 10%, but can anybody throw more light?
Oh, no. We're eagerly waiting the answer too. So I think we've been to this dance once before. We saw how the cash grant was wound down, and there were mechanisms that made that a graceful exit of the program. And in fact, there are still cash grant programs that are alive and well. So cash grant is still alive, even though it expired 2 years ago. We expect to see some similar sort of transition with the ITC. So it'll be a feathering out, if you will, to whatever the future is going to be. We don't know if that's going to be a 10% ITC or if there's going to be some sort of production credit associated with incentives going forward. I think it's completely unclear. What we do know, though, is that that we've looked at is that the tax arbitrage benefit of third party is not necessarily the only driver of third party ownership, right? The ability to offer solar as a service, where you have the service provider is the system owner, makes a lot of sense. And so we don't think the economics may change, and some markets may be in the money or out of the money when it comes to solar, but we're waiting to see what the final answer is going to be as well.
Just to complement that, I mean, in a post-ITC world, I think there's a question: does solar still exist, or how does it exist? And I think, if you actually look at the margins in our industry in general, and then you look at the cost decreases that are occurring, you see a cost decrease in equipment. You see a cost decrease in financing. You see a bit of a jump in a lot of utilities in their rates. You see a potential large margin and a cost decrease in the actual installation. You see compression in design. You see operationally efficient distribution. I know because that's what I do. So the basic piece of this is, in a post-ITC world, solar does significantly exist. It significantly exists across multiple states. And to give you an idea, it used to be that solar was sold at $8, $9 a watt, and today we're at anywhere from $3 to $5 typically. So there's always a way to actually sell solar as well, and so there's a whole bunch of things we can do. But that to me gives me comfort, because I've actually looked at that waterfall of cost, and it's very clear that there can be a lot of successful companies in solar in over 30 states.
Good point.
I think we have time for one more question, right here.
This is a bit of a stack question, but it was referenced only once so far that I've seen it, but it seems to be spoken about a lot by other industry pundits. The concept of value of solar to the grid on an incremental level hasn't really been discussed, but it's extremely critical to the net metering conversation. I think the Hawaii market specifically gets a little bit misrepresented in understanding what's actually transpired there in the last 3 years. So if you actually look at that consideration related to the value of solar to the utility over the last 3 years, it's actually shown that it can have a positive impact. But what are we seeing elsewhere on a broader scale, and how much of a role should that play in these discussions when it comes to net metering legislation?
I think it's an interesting kind of subject when you kind of really get into the weeds of understanding how utilities set rates. Is the rate that you pay a utility for every kilowatt hour that you buy equal to the value of that kilowatt that was consumed? And the reality is it's not. The whole rate game is very political. They're trying to allocate benefits to different groups. Low-income customers tend to get lower rates for pretty arbitrary, relatively arbitrary reasons when you think about how the grid operates and what the cost is to serve every single customer. So it's just part of the game that's how rates are built today. And to kind of say the idea of what's the value of solar and try to price solar that way, where you are kind of in this different model where it's not value based, it's kind of regulated rate of return kind of based, kind of puts together two different philosophies of how you should price electricity. So I think that as a society, we're having those conversations of what's the proper way of pricing things. How do we keep people on the grid? It's the same issue in natural gas and electricity. If you have certain if you price too high, then low-income people will just disconnect from the grid. If you have fixed charges, low-income people will disconnect from the grid, but then on really cold days in the winter, people will die because they can't afford it. And so these are real issues that go into setting rates. And I think net metering is the most effective and the most logical kind of policy to encourage distributed generation. It's paying the value of electron at the point of delivery, which is at the home. So that's why the retail rate kind of makes sense there. And so that's, based on the current model, that's where net metering really plays in really well, because it works with how things are priced today.
To give you a very high level, when you look at the metrics, 10% of the power produced at a power plant gets to the home. So you're losing about 90% of the power from the time you produce it, going through all the wires, all the step downs, all the way to the home. And so you're really only getting 10% of that original production, right, or something close to that. Whatever it is, it's a huge loss. If you look at local areas and you say we can put solar on a roof here, homes and businesses are either located in a highly populated area, or let's say it's located far out. In a highly populated area, there is a potential solution to power that local area without having to travel that power through pretty much long distances of wires from a power plant. That, in theory, could really be a huge benefit. I don't know if we have the technologies yet around that to do microgrid management at that type of level, and I think it's a new type of microgrid management. But the other piece is, if you're far off and you're, let's say you're on a farm somewhere or some industrial facility and you put it on your roof, the cost of getting you power in the first place might actually be pretty significant, and therefore you're actually removing that cost of getting power. And so, there's lots of ways to look at the cost of moving power across wires, and it may not be that it's 90%, but it's a significant number. And so there is a theoretical way of making this really advantageous for utilities and an interesting play. I don't know if the technology exists yet to actually address that.
All right, well, I wish we could keep talking about this all day. I certainly could, but we have to move on to commercial now. But first, could everyone give my panelists a round of applause?